Live. See, it goes right up in our face, Rose. We need to. There we go. We're live. Always freezes and stuff. Hey guys and girls, welcome to this week's Tuesday Night Live. Thanks a lot for tuning in, and I have Renouf. Thanks for joining us, Rose, and being on the live. You always have a thing where you leave your phone on loud and that people always call you. It never ends for you.
I'm turning it off.
No, it's all right. All good. Here, give it here. Put them on silent. There we go. Thanks a lot for tuning in. For those of you that haven't met lovely Rose beforehand, Rose Renouf has been my personal broker for almost 20 years now. There was a lot less grey hair on my face and in my head when we first met. And long time that we've known each other and long time that you've helped me build my portfolio. One of my first things I'm going to talk about today is the amount of people, just some stats that came out of, I think it was AFR the other day, with some stats of, the amount of landlords in the country. And, not many investors have 200 properties. I don't know any other investor with 200 properties in their portfolio that they own in their portfolio. And I don't know many people with 50 or 100 or 200, it's not normal that happens. And I know firsthand, like I can make great deals happen. You've seen me do that over the last 20 years as well. But I wouldn't have been able to accumulate so many of them if it wasn't for having the right debt strategy and, being able to finance them. Yeah. So on that note, a lot of gratitude to what you've been able to help with, Rose. But maybe if you want to give the audience that are watching this tonight a little bit of a rundown on, yourself and what you've been doing and, how you help people. And
can I boast about myself?
You can boast about yourself, yes. Rose loves this. She works very hard, but she's very proud of what she does.
Why not, right? Doesn't happen all the time. So anyway, good evening, everyone. I have been a mortgage broker for 20 years at least, and Nathan, obviously, I met him when he was 18. And being a mortgage broker, I specialize in residentials and lately more on investors, but we still do owner-occupied. Mm-hmm. And I also do a lot of some of the commercial lending. So just to give you a background, I am accredited with few lenders, the main lenders, the second tier, there's a second tier, there's also the private lenders. So there's always there's always a lender for you.
People think they can't get a loan, right? We've seen, there's things that are no-doc loans that are out there still. People don't realise that. Just the other day, Rose, you pulled a rabbit out of a hat. One of our investors actually was, they were working for a long period of time. They're on like an income, I don't know, 100 grand a year, whatever it was. And they decided to go contract because they get like 120 grand a year, whatever the case was. It was more than that. I know their position, but just for the exercise. And basically what happens if you go from PAYG to a self-employed, you're locked out of the market for 2 years. This guy was building his portfolio and he got stuck, right? He's got like 7 properties in the last 6 months or something, and he's got stuck. And you're able to go, hang on a second, there's a product out there. What's the product?
It's a product like when you're in the transition period, right? Yeah. Like from PAYG to self-employed. As long as you're
ABN or something.
One day ABN. If you're in the same industry, we still can do that. And what the bank does is they'll look at your last financial year PAYG summary, and that will be the basis for your income.
So a lot of people think they have to wait 2 years. I always thought we did, but you found a product that can help these people out. So. Yeah, very, very cool. Lots of interesting things that you've been able to do for people over the years, and people feel like they're stuck. And
well, there's always a solution, right? And I always say, if we cannot do it, no one can.
Exactly.
Is that right?
Exactly. So, just getting into today's episode. I've got a few news articles here, as always. I'm going to share a few of these with you, but nothing too exciting. So. Nothing too exciting. There's lots of exciting things happening out there, but we'll get into it. There's news all the time, but sometimes it's like really, really exciting. It's like, hang on a second, this is like, I can get really passionate about it. This one here is just, this came out from the AFR the other day. I'm going to put this right up on the screen here. This is from the ATO from the AFR. This just goes to show the number of rental properties that investors have. So the amount of investors that have one investment property is 1.5 million dollars. 1.592 million people have one investment property. So out of the country, we have 25 million people. That's like 5% have, just over 6% have an investment property. So that could be that they have an investment property, but they don't have a principal place of residence.
Yeah.
Then we've got the second one here is people that have two investment properties is 418,000. So it's about 1/3 of the size or 1/4 of the size of the people that have one investment property. Then you go down to the people that have three, the lucky people with three investment properties. There's 130,000 people in that category. Then you go down to four, which is 46,000. So it just keeps dropping. And then you get down to the six or more. And when you get down to six or more properties, you've only got less than 20,000 people that have six or more properties in their portfolio. So, always, we recently had the B.Invested Christmas party, and we had investors coming from all around the country, which was really cool. And there was a room of a few hundred people, which all had, different stages of their journey. They might have been starting out, people with 20 properties, 30 properties, and all that. It's just one room. We had 5%, 3% of the people in here in one night in our room. And they're people that we've interacted with and actively, not including the people that couldn't make it, not including the people that, we've been able to help from education or you being able to finance and, not one-on-one with me building the portfolio. So really, really cool to see out there that we've played a big role. And Zinger Finance, we've financed a lot of those portfolios. So which is really exciting. So first article today, a lot of people are talking about, we're potentially in a crash or, the markets are getting soft or whatever. Certainly not the case. This last week, I've lost over 21 properties, and those 21 properties are properties that I've secured on behalf of my investors. Other people have come in the market, paid more money, and we've had to get our deposits refunded, and the contracts didn't go ahead. So looking at, the amount of activity out there, that shows me that there's confidence in a certain segment of the market. Some markets are a bit softer out there, but some are pushing forward. Anyway, this article here is pretty cool because just showing that this Ponzi scheme keeps alive, right? We've had these Ponzi scheme on top of Ponzi scheme. So this one here, which publication was, it was Australian Financial Review. Chalmers strikes a deal to use the super to build millions of homes. 1 million homes, right? We've got 25 million people. He's talking about adding 5% of 5% of homes, right? That's like if there's two people in the average house. I'm just making that up, right? If there's two people in the house, that means that they're planning to build 10% of the housing over again, right? Which is pretty massive, right? Goes on to read that Alba-Sleazy government has struck a deal with struck a national housing accord with states and territories that will free up land and build 1 million homes in 5 years. I don't know how they can build 1 million homes in 5 years, but it's a fun number to go and laugh about and play with. Backed by
mention the council approval probably takes
another 10 years. Goes on to read that backed by the capital from, interestingly enough, a $3.3 trillion superannuation sector. The agreement between all levels of government, foreshadowed by the Australian Financial Review, is designed to tackle the nation's housing supply problem by incentivising institutional investors and superannuation funds to be involved. So this is now taking the onus from average mum and dads and stopping those things from happening, stopping the people from getting, those 20,000 people that have 6 or more properties, to putting them only in institutional hands, right? And I believe this is going to be the next level of stimulus to then add fire to the already cooked markets that are out there just to push things up. And the institutions such as the banks and the super funds and all those sort of entities, they have specific requirements about what they need to have in their housing. They need to have a specific rental yield and specific things to occur. The Accord recognised most of the supply needs to come from the market, with government playing key role in enabling kickstart investment. Dr. Chalmers said before the budget on Tuesday, it is more important than ever we work together to ensure that there is an adequate supply of affordable housing where it is needed, close to jobs, transport, and other. Missing that last word. The Accord recognised most of this supply needs to come from the market, with playing key role. Other services. It's printed on 2 pages. Crazy. The government will pledge an initial $350 million over 5 years from 2024, supporting the funding of 10,000 affordable homes, including availability payments made by the National Housing and Infrastructure Facility. The institutional investors and super funds signed up to the accord. It's pretty funny, right? They just said that there's 1 million new homes being built in 5 years, and it says the 5 years from 2024 that they're going to be pledging X amount of dollars for 10,000 affordable homes, right? So it's very misleading in the article there, right? It has a broader aspiration of building 1 million well-located homes over 5 years from 2024. The budget papers, blah, blah, blah. Anyway, it just goes on to talk about, the institutions that would be investing and playing a part of this, and it's talking about doing build to rent. And it just, leads up to the you'll own nothing and be happy, right? The World Economic Forum has talked about this, they've prophesized about it, and now, funny enough, it's coming into fruition. This one here, I think I may have spoken, no, I didn't speak about this one. Maybe I did. I don't know if I spoke about this. It came out recently. I'm pretty sure I spoke about this one last week, but if I haven't, here it is again. Jeff Bezos plans to donate fortune hours before mass job cut rumours at Amazon. In the last week, we've seen, Deliveroo, I think it is, the servicing app of dropping off food and stuff, closed down. Lots of big businesses are closing down. Why are these companies closing down or cutting staff? It's a problem with liquidity. I said between September, October, November this year, we would see liquidity getting sucked out of the market. There's safer places for institutions to be putting their money, and naturally that's coming out of all markets, which is going to cause a massive recession unless they keep re-injecting that liquidity. So when we're seeing stuff here, you've got here 10,000 workers from Amazon losing their jobs. I'm excited because we're looking for staff all the time. We've always got like 50 staff that we're trying to employ, constantly growing as a business, and I'd like to find good talent. So these sort of markets deliver opportunities, but interesting times out there just to solidify what we already knew about. Next article here is from they've labelled it "We Have No Choice: Nation Forced into the Metaverse as it Disappears." Tuvalu, which is an island off the outskirts of Australia, has delivered a spine-chilling address to the world leaders at the last COP27, whatever it is, confirming climate inaction has forced it to become the world's first digital nation. It's interesting that using this climate change and how do these I was going to say companies, how do these countries get their funding? Where is their funding coming from? It's coming from these lobbyist groups and these these think tank groups and these World Economic Forums and all those things. So if a country needs to get some cash flow coming through, they need to sell their story as a bit of a different story, right? They're getting grants and different sorts of bonuses and benefits for doing so. So, looking here, they're talking about going completely digital in the islands near Fiji, 1,000 kilometres from Fiji. They're going completely digital, but once again, it's just the R&D test case, just like the rest of the world. Everyone's being signed up to a digital identity and a digital financial system, because when the next time the financial system implodes, there ain't no way of stopping it. We've seen a test of what's ahead when it comes to inflation. The inflation levels are massive, and they're not going to be going anywhere anytime soon. And on that note, my last article for today, which is pretty property related, just talking about property values here. It says here, Sydney real estate, only 1.8% of Sydney homes are available under 600 grand. Right? I remember when a time 10 years ago, half the properties were under 600 grand. There was so much stuff under 600 grand. But it says here, since the start of the 2020, I'll call it, the fun time that everyone signed up to, didn't want to sign up to, but buyers in Sydney looking for an affordable house, feeling the pinch in an unfavourable property market, with new data depicting that the number of homes under 600,000 is hitting new lows. Right, so if we're in such a bad market, wouldn't we be seeing all these properties under 600 grand? There'd be more of them because the prices would be falling. And I think this ties directly to what you specialise in, Rose, is finance, right? People can't finance their properties, right? They can't finance a $1.2 million property like they used to. They can't finance 1.5. You can if you're dealing with Rose, but it's getting tougher because people can't afford to buy at certain price points because their income doesn't service it anymore because interest rates have gone up and less capital flying through the paychecks for the calculations to work with. So the cheaper properties are being pushed up. The latest PropTrack Insight report has shown only 1.8% of properties available in Sydney are listed at 600,000 or less, a sharp decline from 10.5% at the start of the scamdemic 2020. So there used to be, only 2 years ago, 10.5% of properties listed for sale were 600 grand or less. Now it's in the 1%, right? A lot of people are sitting out there, and I speak to them, and they're like, "Yeah, Nathan, I'm waiting for the property market to crash." Well, you can wait for the property market to crash, but it's only certain segments of the market that are being affected, and most of the segments are being pushed up because relatively low cost of cash out there still, especially when you're factoring in such high rental returns that we're finding out there. So interesting to see. Other capital cities, regional areas have experienced more dramatic drop in affordable housing, with the figures dropping from 71%. So if you go across Australia, 71% of properties in regional Australia in 2020 were under 600 grand.
71%.
71%. And now 45% of properties, right? Doesn't matter if you go to little country town of Orange or Bathurst or Tamworth or wherever you're going out in the sticks, you're still paying 600 grand out there, and that's very interesting because we're still picking up properties for 100 grand, 150 grand, 120 grand. That's the market that does really, really well out of a recession, and I've always talked about it being a recession-proof portfolio is what everyone should be aiming to achieve. So just interesting to see that the data is backing up what we've been talking about and what we've been doing here at B.Invested. So that's just my little segment today. I'm going to tune out and I'm going to hand the stage over to you, Rose. And there's a few questions that I've got here that we've talking about tonight. And I guess the first one is, how important is a mortgage broker in growing your portfolio? And yes, there's mortgage brokers out on every corner, right? Like when you first started as a mortgage broker 22 years ago, whatever 20, it was. 22, yeah. When you first started as a mortgage broker, I'm sure that there wasn't many mortgage brokers out there. It was a fairly new thing. It's like when I started the business, there was no such thing as a buyer's agent out there, but everyone's a property guru now, apparently. But there's good brokers and there's bad. You see our clients come in and their positions are quite often screwed up. They've got crossed loans, they've got structuring that's bad. How important is a mortgage broker in growing the portfolio to be successful?
So how important is mortgage broker in growing? Okay, I should ask you this because I was your mortgage broker. How important I was to you in growing your portfolio?
I can find the deals all the time, but if I can't finance them, then I can't do a deal.
No, what I'm saying, like when I was your mortgage broker,
well, you still
20, are. I still are, still is, still are.
Still are.
Okay, when I was your mortgage. I am your mortgage broker. So was I important to you in building your portfolio?
Of course, because I came to you, Rose, because I was dealing with a bank. Actually, I was dealing with St. George Bank quite a few years ago. It was the bank. I had a little fucking St. George Dragon money box. There's
the green and the red dragon.
There's one here. We've got money boxes from every bank here. There's a St. George Bank. There's a Westpac Care Flight shop. Anyway. There's a Commonwealth, there's a Platy Bank. There's a CBA Platy Bank there.
Yeah.
I like collecting money box, don't know why. So I grew up you go, okay, most people get a dollar account. They're indoctrinated at school. Here's your little, Platy Bank or your Dragon Bank or whatever. And I went to get loans, and the person that wrote my loans was good. I got a loan. I thought, great. I want
That's
to buy a
from the
second
branch, right?
directly from the branch. And then I went to get another loan, and then okay, that's fine. I went to get another loan, that's fine, and I got stuck. And the bank person just said, piss off, right, whatever. I think I got to about five actually,
Yeah.
and they made it sound so great. Like we've got this thing called a portfolio loan. I've got no idea about finance. I'm bloody 18, 19
Yeah.
years old, and I got it all. And they said you can't do anything, can't do anything, can't do anything, can't do anything. And I was on a property forum, and I was chatting to this guy, and then I was telling him my problems. And then he said, oh, you should talk to my mum. She's a mortgage broker. And then that's when I spoke to you, because it was his son I was talking to on a property forum. And here we are, like 20 years later. And, if I had have just taken the bank's word, oh, you screwed up, you can't do anything, I'll be sitting here at five properties. I'll be telling everyone how tough it is and how you can buy five properties in 20 years. But you came in and he said, hey, this is what we need to do. And he got me the next three or four. And I started getting stuck a little bit, and I was like, hang on a second. I realized, I learned along the way that, it's not about the the property. I had a care, like I want it to be a nice house. I want it to be, I thought I was so great. And then I realized that it's a bank's game and it's a finance game. It's not a property game. And I can specialize in property, but if I don't have the money, I can't do shit. And I think too many people focus on the property or on specific things, and they don't have the right leadership, and that's where you've come in and helped me. So I've used maybe three banks and maybe two brokers over the years, and you've done about 70%, 80% of my loans to get me to where I am. I think
More than
80%,
80%.
90%.
Yeah.
But all the loans today, you've done all of them.
Yeah.
You've done all of them.
Yeah.
But like those early ones, yeah.
Yeah. So anyway, the importance of a mortgage broker in growing your property. Okay, as a mortgage broker, this is how I work. So if most of you probably notice that every time I do the appointment, I send you an email. Can you just complete this template, right? So visually, I can see your list of your properties. I can see the addresses, how much estimated market value, the rental, and what's the loan amount. So basically, I will review that portfolio of yours. Then I will put then a strategy in terms of, okay, I'll pick up this property. We know a lot now as to where is the growing area, right? And I would probably say, okay, this one is really good to refinance if equity release is required to purchase more investment properties. So what I would do then, once I have reviewed your portfolio, I would say, okay, let's pick up one of these properties. Your servicing with this lender is very limited, and yet they can. I want to maximize that lender, so we're just gonna say, okay, I'll pick up this property. We'll just refinance this property, right? I'm not refinancing everything. I'm only refinancing for the purpose of getting that equity and for the purpose of making sure that we are not wasting that equity.
The opportunity, yeah.
Yeah. So when I refinance one of the property, I said the bank can lend you this much, but no further. Okay, let's do one. And when we can release that property, you can no longer borrow with that bank. So I would say, if you can release 300,000, I'll give you a security for that equity. I don't mind you to cross. The bank said I have to cross secure the property because the rent for that. How would I know if you really purchased that new property? So I'm okay. Okay, cross secure that property, and right after the settlement, I don't leave that property for too long. Right after that settlement, I'll pull out that property. It's called security variation, right? Now that the bank knows that you really own the property, they don't mind. So I'll pull out that property, and that makes the property unencumbered. Once the property is unencumbered, I will use the property again, the unencumbered property, for as a source of deposits. So I can put a loan on that.
Yeah.
Now, if I have another property of yours that has equity, I would probably pick up one of that property for this lender. So I'm not saturating one lender with all these equities that they cannot release because servicing is a problem.
Yeah.
So every steps like what we do, we always think, okay, equity cannot be wasted. It's like money. You can't just give it
It's,
to the
it's money
bank.
that you're leaving there, yeah.
Yeah. So those strategy, you need to make sure you know what you're doing. The broker knows what he's doing. Make sure that we have two steps ahead, because even if I say this is my strategy, I have then to test if this other lender can do you further.
Yeah.
Right? If you can, they can borrow you more. There's no point of me like this is the strategy. So it sometimes it can take us time just to look for lenders that can service your.
So I spoke to one of our clients the other day,
Yeah.
and he's new, and we're working on getting him two properties to start off with. And I think this guy can get to 10, 15, 20 properties pretty easy. His position was a bit screwed up, and I spoke to him for the first time a year ago. He owned a property, he owned like three properties, but he owned about five, but three of them were crossed with, they were half
Mm.
owned with someone. So he restructured his position, made one 100% his, one 100% the other person, and one he sold. He has 300 grand in his position. And I said, let's buy two. And he's like, yeah, but we've got 300 grand, we can go buy six, right? 50 grand deposit
Mm.
times six. And I said to him, no, what the broker's trying to do for you is when you buy those two properties cash at 150 grand a piece, you're going to have an extra 300 bucks a week times two. So you got $600 a week extra rent coming through, which that's 30 grand a year. That's going to boost your servicing up. And then we're going to be able to go back to the other properties that you have, release another 300 grand worth of equity. So then you'll have the two properties, 300 grand outright, be able to get another 300 grand worth of equity. And then once he's got that equity, you can go back and get loans against those two properties.
Yeah.
And then that will enable him to do two now, but do another eight by Easter, and another three or four after that. And that guidance was given from your team, and that's coming from your training, your nurturing, and your educating of our team over the years. So yeah.
And also using a mortgage broker for in growing your property, we also doing a lot of. My first question with you is that what do you really wish to do? Like I want to align your goals, and with I want to be with you with with the journey, but I need to find out first what's your goal. But I'm not one of those brokers, and how often I will hear from you guys that says, oh, my broker said don't worry buying anymore, you've got so much already and interest is going high and everything, so it contradicts to what you wish to do.
And what I found is that most brokers are trying to look out for their own personal interests. They fix people's loans for 2 years, which keeps them locked in so they don't get clawbacks. They cross collateralize the loan so they get screwed up and they go 95% LVR so then they can't move anywhere. They can get the largest loan amount in one deal. Yeah.
And also the borrowing capacity, that's very, very important, right? And once we review your portfolio, what you can do, this is like maybe you can add two more properties, or we have to stop on this for this certain period until we can accumulate these, or those sort of thing. Is there's a lot of effort or knowledge or skill set from the broker to be able to do that, because we first of all we need to know who are those lenders that can do it, right? Who knows about trust is like, okay, I can borrow under the trust, but then again I said, do you service? Because trust doesn't have negative gearing effect. But I do not advise you to say like, oh, do not buy under the trust. But we need to fit in as to like, okay, if you're buying a trust, who's the lender that can cater for that? Because there's no negative gearing.
Yeah.
So it will impact your servicing.
Yeah. And we had that chat the other day about one of our investors that were like the new properties that they're buying are going in the trust, and it's going to trap, it's going to impact having in the trust. Yeah.
Mm-hmm. So, I mean, it is really, for me, I will highly recommend. It doesn't have to be me, it doesn't have to be with Zinger, but to find a good mortgage broker can help you grow your business, your property portfolio.
And you just use the word business, and I always said from day one of this business of B.Invested that you need to treat your property investing like a business.
Like
and
a
I think
business, yeah.
a lot of people just treat it as a hobby investor, and that's why when we look at the stats, only 1.5 million people own one investment property, but only 19,000 people own six or more properties in their portfolio. And I think it's important to treat it like a business, and then understand have a business plan around that, have a strategy around that. And when I came to you, I've shown you Excel spreadsheets, all my properties, where they're at, who the loans are with, what the loan amounts are, what the values are. You can look at it quickly and go, when I come to you and I give you my portfolio, I'm treating it like a business. I'm not just someone coming going, oh, can you get me a loan? And then later on you find out I've got credit cards over here, car loans over there. Like it's all packaged up. I've given you everything at the start. And I think a lot of people don't treat it like a business. And that's,
Well, I always think of it as a business,
yeah,
right? Because it is a business.
Exactly.
It just happens to be in properties.
Exactly.
Mm.
Cool. And you've got any other
Yeah,
things you want to talk about with the importance
it's
of mortgage
probably,
broker? Okay. And I think one last thing as well, Rose, is that like if you go straight to the bank, that bank will only have a capacity where they can only lend maybe $2 million or $1.5 million. They cap out. They can't lend past a certain amount. But you can take them to a different bank, and you've got exposure to dozens of banks, which you can take someone to. I've seen you
they
take
can only recommend one product, right?
Mm.
They're not one product, their own products.
Yeah.
And they would even know, like, for example, like this property, right? When we do valuation of the property, we brokers, because we do a lot of properties, right? We said, oh, hang on a second, that area there, didn't it just grow in,
Exactly.
capital? So we kind of know, like, which lender has valued this particular property.
Yeah.
So it's
And which lender can give you the best outcome from the valuation
yes,
as well? Because some
yeah,
will be more, they'll have a greater appetite for a specific area. Some
that's correct.
may not like that area, or they might have too much risk in the area, or too much risk in the unit complex, or whatever. So it's important. So I guess that takes on the next thing is how can a broker support the ongoing education of investor?
Okay, I do like educating the investors. I mean, making them aware what's the current industry what's the current bank policies,
Mm-hmm.
and then also let's look at like what Nathan was saying. Like for example, from PAYG to becoming a self-employed, right?
Mm-hmm.
That period of thing, and some of you guys would ask me like, should I do that now, or and sometimes I may say, okay, you can as provide on the provision that we need to finish that financial year end, because I want that income to be the
For the
basis for because self-employed doesn't have any, you
Yeah.
don't how can we base the income from but from the last thing. And also, like, for example, self-employed, often I get, and it's often happens, like self-employed that I know a lot, they would ask me, Rose, before I get to finalize this financial, can you just cite it?
Yeah.
Though please remember, with a self-employed, there is no point of giving dividends or director's allowance your individual tax return, because the bank doesn't count it unless you have 2 years history of that.
Yeah.
Now, that's a waste of
Yeah.
income, right? Now, the reason there's a difference between salaries and dividends and franking credit, do you know why the accountant doesn't classify that as a salary? Because if you are in a salary, that means every bus statements that you complete every quarter, you need to declare the salary and obviously the PAYG installment, right?
Mm-hmm.
So towards the end of the financial year, then they would classify, oh, okay, we'll just put dividend on that, or a director's allowance. The problem is the bank doesn't accept that.
Yeah.
So salaries and wages is mostly recommended.
So I think it's important
Yeah,
that you think about not just about your tax return, and it's important of having the right team, but think about what does the bank require
that's
from
it.
me to give me
Yeah,
the
yeah,
debt,
yeah.
and that's yeah.
And also, like, for example, the net profit before tax. Now, I often said, okay, what's the net profit before tax? Do you have any financial debts? Because I can only use the net profit before tax if you without the, if you don't have any debts, because to take the net profit before tax, I also have to consider the company's debts.
Yeah.
Then I have the depreciation as well. And most of you would say, okay, depreciation, this is a full write-off, right? If you buy a vehicle this financial year, I can write it off.
Yeah.
Now, which of the bank would, how the bank treats it, right?
Yeah.
Now, if I go for, say, ANZ, you make it as a taxable, some, most of them, right, taxable. And there's also depreciation that is not a write-off, which the bank would take. It's a net effect, not part of your
Yeah.
taxable income. So that sort of thing that I do educate you guys, and maybe hopefully that you can also tell your accountant, and sometimes I speak to your accountant because you let me speak to your accountant, and sometimes the accountant wants to know
Yeah.
how, how would I distribute this income. And also remember trust, right? For example, trust. We have, you get this trust. When you own a trust, the income of the trust is fully distributed, right? You can't hold
Yeah.
the income in the trust. If you have a trust profit of 100,000, that has to be distributed. Now, some of you distribute it to your children
Yeah.
or whatever, right? When they're not using, sometimes is I feel like, oh, why? Why
So
can't you just distribute to yourself? Then I can
so
increase the.
so you see, people when I'm speaking to people on a daily basis, and I don't give them finance advice,
Mm,
obviously, but when I'm speaking to people, I'm looking at I'm looking at they go, okay, I've got 100 grand that burnt, but I've got
mm,
150 grand in the business that are left, so they're really on 250 grand. But they leave the 150 and they put some other sort of tax way. They might pay 30% instead of 40%, right?
mm.
So what are they going to do? They're going to save 10% difference
Difference.
on 150k, so they save 15 grand, but then they can't use that 150k, and they can't service,
Yeah.
and they can't do what they need to do.
Yeah, I think it is important, especially with the self-employed, that to structure the uh, the company
Yeah,
business in terms of how you gonna the revenue and also the description there, right? We often I've seen it like it's a cash boost or a job keeper. Now that is acceptable to the bank now, but sometimes it's accountant, they describe it differently.
yeah,
Then we have an issue, right? Because according to the bank, that's not qualified. If the
mm,
description is cash boost according to how it
yeah,
was disbursed, then maybe use that.
yeah. And I guess the other thing as well that you need to look at is the ownership of the property as well. Like, not just is it in a
Yeah,
trust or a personal name, but do you have co-people that you're buying it? Like,
yeah,
because I'll just use an example. If I was to buy a property and you were to buy a property, and let's say we could borrow 500,000 each, I could buy 500,000 myself. I
mm,
could buy 500 my friend or my brother or whoever could buy 500 grand worth of property. But if we went 50-50 in a property, the bank's going to hold us jointly and severally liable for that. So that means instead of me having 500 and you having 500, collectively having a million, means that you have 500, I have 500 of the same asset, and the bank takes us both for that debt, which,
yeah,
yeah,
yeah. So this is the problem when you are in partner. Look, in buying properties, I only like to partner with my husband, right? Because obviously, what is yours is mine, and what is mine is yours, or is
mm.
mine alone, whatever it is, right? But if you partner, like for example, me and Nathan partner with this property,
Hmm.
now I have to borrow money for my own purchase. Because I have this loan with him, I have to carry that whole loan.
Yeah,
And I cannot service, right? Because I
yeah.
can't, I take the full loan and yet I can only take half of the rent.
And
So think carefully when you're in partner with someone.
I've seen it so many times where
Yeah.
you've got two siblings that might be 25 years old, and then they hit 30, they own this property jointly together. The one at 30, one of the people at 30 might want to be like, okay, I want to go get married, settle down, buy a house, have kids,
Mm,
whatever the case may be, but they can't because they're carrying the debt of the other
that's it.
person that could be on a tiki
Yeah.
tour for the next 5 years,
Mm,
and their goals are very different. So for me personally, I don't actually own any property with anyone. I've owned maybe 3 properties over the last 20
mm,
years with people, but it was mainly because I had no money anyway to buy it, so I just got it put
yeah.
under their name
Yeah.
and carried their
Yeah.
servicing. But yeah,
So those is just one of the, and also clear credit file, your credit report. It is very important to manage that. And
what are the most important things about it? Is it the credit score? Is it paying your mortgage on time?
it's
Is
not
it,
only the mortgage, even your repayments with your Telstra phone or anything like credit card, you're on time because it's all
yeah,
recorded if it goes over 90 days. So
okay,
that is important. And also when you have a property, right? You have to really make sure if I have to refinance that, it's very important that particular loan must have no missing repayments.
yeah, yeah.
So yeah,
So if you're thinking of refinancing, you're thinking of pulling out equity, make sure that you pay your mortgage on time. Make sure you pay your bills on
yeah,
time.
yeah.
Make sure you've got a good credit score. If you can't, you can still go get a loan, but you're going to be paying high
By
interest,
higher interest
lower
rates, yeah,
LVR,
because they
etc.
consider you a risk.
Yeah,
Mm.
cool. And I guess we're in a time which the interest rates are rising, and I personally believe we're at the top of the cycle. That was something I was going to look at. So while you answer this one for me, I'm just going to check and see, give everyone an update where we're at. Um, but what does rising interest rate market mean for investors? Like we're in a market where, yes, people are paying. They're paying 3% interest rate now. They're paying 5% interest rate, 5.5% interest rate. What does that mean? Like, apart from paying more, let's say you're paying extra $100 a week, you can go bump your rent up by $50 a week or whatever, and it'll cover it. But what other things should people be watching out for? I think it's very important.
Well, it's with the interest rate being, the keeps increasing. Obviously, the impact is capacity to service the loan, right?
Yeah.
Because nowadays is that the actual rate plus 3% buffer, that would be your assessment rate. Now, I have also noticed that banks now, like ANZ, CBA, or NAB, they're very liberal in giving you discount. I have one that I just asked for a discount with under CBA. I get this is for investment interest only for a 541,000. I get a 3.06 discount. No, I end up with only 5.18 interest
Mm-hmm.
only, right?
Yeah.
For the next whatever, 5.8. That is a pretty good rate. And the good thing about that as well, because that is the rate that I'm getting, if for example the interest goes down, that means you get a very, very, because the bank now are really very generous with discounted variable rate. Now, yes, it's still very high, but there is also a thing that you can also offset that with the cash rebate.
Yeah.
That
Okay.
would help. That would help. And as I said, ask for a better discount on your interest rate. Obviously,
When you say cash rebate, what's that?
cashback. Like if
Maybe
I have to
explain to people.
refinance.
You know what it is.
Okay, I know. Sorry.
I know what it is. Explain
So,
it.
okay, so if I have to refinance you from whichever lender to ANZ or to CBA or to St. George's Bank, they give you the cashback. That cashback is really to defray the expenses from refinance from one lender to another
How much
lender.
is the cashback roughly?
Sometimes it depends on the loan amount. There's 2,000, there's 3,000, there's 4, there's 5,000.
Okay.
It depends on your situation. So that could help you as
So
well.
if someone had 10 properties, right, and they wanted to refinance 10 loans, would they get
No, only per
per
borrower.
application? Okay.
Per borrower.
So if
Yeah,
I
yeah,
refinance
yeah.
one to CBA, one to Westpac, one to ANZ, would I get the rebate from everyone?
Well, different lenders would give you, but if you have
There's a
refinanced
good way to get your next deposit.
if you refinance 3 properties to ANZ, you'll only get once, right? If you refinance to
There's
St.
three
George, you'll
different
only
banks,
get
yeah.
three
Okay.
different banks, obviously, right?
Okay.
Now, obviously, capacity to service the loan has an impact of the rising interest rate, but bear also in mind there's other alternative. For example, you want to sell this property. I'm talking about portability. If
Yeah.
you want to sell this property and okay, I don't want to be assessed again because then I have to provide all these documents, and plus my income was not as high as I used to. There's always that feature of the loan that's called portability. So when you sell your property, you want to maintain that account, right?
Yeah.
If that account is like 300,000, so we can replace that we will maintain that loan amount,
Yeah.
loan account, release that sale, and comes in the new purchase.
Yeah.
There are conditions. Make sure that the loan valuation ratio is similar to the original loan. It cannot be lower. It cannot be higher than whatever. And
They could drop it down, but you can't push it
you
up.
can't push it up, and it has to be simultaneous settlement.
Yeah.
If you cannot do simultaneous settlement, they can also do is that you can secure that, because sometimes it's hard to do the simultaneous settlement. You can also use a
term deposit
to secure that particular loan. So that is also an option.
So people could be watching right now and thinking, okay, yeah, that's great. I watch Nathan every week. I listen to Rose every now and then when she comes on, and I can't buy anything. It's a tough market out there. Interest rates have gone up, whatever. My property is negative cash flow, whatever. And you may not service, but technically, if you had a property, right, and that's something we're working with a lot of our investors from many years ago, They might have bought a property for 200 grand. They might owe 200 grand on a whatever. Just use 200 grand as an example. The property is now worth 600 grand. They sell it off, then they go and reattach new property to that for 250k. Got the 200 grand loan there, and they pocket the other 350. They go and buy another 2 or 3 properties using that, and you can still utilize that loan and be able to trade out of your position of cashing out your equity. So I actually had that thought last night, because one of our early loans that I did with you was for a $50,000 property. It was $48,000 purchase price, and it's in a town which has really annoyed me over the years. And I've chucked it on the market for sale because it just keeps getting trashed out there. And I'm like, let's get rid of it. It's gone up and gone up crazy. And I think I've got a buyer on it for about 5 times what I paid for it. And I was thinking, okay, I've got the loan that's only 40 grand loan. I'll just throw one of the cheapies at it, right?
And then replace it.
Replace it, right?
So there is a portability option as well.
Yeah.
Yeah.
Cool. And I guess there's other areas. So if someone can't buy under their personal name, can't buy under trust, what about super funds? Like, I know we can't talk about that, and we don't give financial advice on anything that we say. But there's people out there. I actually saw one today where a person had 250,000, and I was like, I've seen people with 250,000 that have bought 2 or 3 properties in their super fund. So can you get a loan? How does that work to get a loan for your super fund, etc.?
Well, there is self-managed super fund is a limited recourse, right? The servicing for the self-managed super fund is based on your contribution towards the super, your the rental for that property. Now, I just couldn't believe why people don't use self-managed super fund, because you have some people has like 300,000, 250,000 not doing anything, and with the SMSF it doesn't impact your individual capacity to service, because as I said, it's based purely on it's a limited recourse. Now, that is also an alternative way of purchasing property. It doesn't have to be under your name. It can be self-managed super fund.
Yeah.
And the good thing about the self-managed super fund is that obviously it is named under the bear trust or the custodian trust, and then once that's finished, right, it then transferred to your SMSF without paying another stamp duty.
Yeah.
And the downside of it, obviously, you cannot increase the loan amount even if it goes high in value. If you refinance it for just to get a cheaper interest rate, the loan cannot change.
Yeah, so you can't pull out equity.
You can't pull out any equity.
I think super, in my layman's example of super fund, is super. I think it's a great tax vehicle. I think it's a great vehicle to accelerate your retirement, and it's a great way to retire debt. So my plan when I first started my super fund was that I'll buy the assets under and watch them go up. By the time I hit 65, if I've got some debt left over, all my loans are paying themselves off as is at the moment. And but by the time I get to my super fund, I can crack it open, not pay the taxes because it'll be tax free at that point, and then I can use the profits from there to pay off my loans under my personal name. It can be used as a great tax vehicle, but we can't give you advice on that. So Rose can give you advice on loans and how to get a loan and all that sort of stuff. Yeah. But if you do want to set up a self-managed super fund, if you have super somewhere else, everyone has a super. Everyone watching this, if you're over 20, and you're working or whatever, you've got a super fund. If you're over 30 or 40 and you've been working for a number of years, you would have enough in there most likely to do something with the self-managed super fund. So reach out to my team and you can speak to someone that can help you with setting that up. Yeah.
And FYI, if you're self-employed, the superannuation, obviously, they need to look at the last 2 years. I think you can obviously do lump sum, right? But you need to provide that you are diligently contributing towards the super for the last 2 years. It's not like, okay, I'm going to contribute now because I'm buying a property. They need to look at the last 2 years that you're diligently contributing towards the super.
Yeah. Cool. I guess, someone just wrote in here saying that Spot On went through the same process. Someone else just wrote here, Sarah just said, I've been seeking this exact information. Thank you, right? So lots of people will be watching, they'll be thinking of different things, different ideas. I find, and this is what I like everyone coming on to the Facebook Lives to talk about, is some sort of scenario that they've been able to do recently for someone. So I know that we asked you beforehand about a few clients. Can we talk about maybe 3 investor stories of their positions, and where they were beforehand, what you've been able to do for them, and how you've been able to untangle their position or push them to where they want to be.
Okay, for example, your financials at the moment, you haven't really completed, right? You haven't completed your 2022, and we require the 2022. Now, you feel like, okay, how am I going to borrow because the bank would like me to have the recent financial tax return. There is also an alternative called low doc, right? So one of our clients, for example, he says, okay, my financial is not complete, but I really wish to purchase this property. So we lodged that to for a low doc, and then when their financial was complete 2022, we're able to refinance that loan to get into a full doc. So sometimes a low doc is just a holding there until you can complete your tax return or your financials. So, but at least it doesn't stop you from buying a property, right?
So you got low doc. What about, is there a no doc still?
We have also called a no doc. So this one is this one. I'm just saying to you the one that are not, you could think that it's not possible. So the no doc is called boost loan or something like that. You don't even have to declare an income. Get it? You don't have to declare an income.
So how do they give you the loan then?
You can. They are. It's more like asset based, right?
So it's an asset based loan.
Yes. So
people may not understand that there's things out there like this. So I don't think most people.
So we have one example: wanting to purchase a house. No, financial's not ready. He's only her current role or being a self-employed only recently, so she hasn't been for 2 years. So this particular loan will they will lend you up to 3 years. No income declaration. But the plan is we have to have an exit strategy once the 3 years is up, is that, obviously the financial will be ready, then we can remove that and change into a full doc. Cool. So there are so many things that we can do.
And what other sort of scenarios? Like, we've had people that have been stuck with, they got no servicing, they've had to untangle their position slowly but slowly. There's one that I know that we're talking about beforehand, which had a property that was with a second tier lender, couldn't refinance it. We bought a couple that were cash, boosted the income, they could go service, they put out equity.
So we have, what about this one in particular? This is recently, right? Recently. And obviously, husband and wife, there is a dissolution of marriage, right? And because one property is their, joint, and so we thought, okay, so we boost his income. We can't borrow because he is linked to that loan. So
So once again, like the debt of this person was attached. So they've got a husband and wife, got $1 million house, 800 grand loan. The husband wants to go and buy a new place, but he's still at the old place. The ex has got her name on it, but he can't service because he's got the debt.
Has to carry the full debt. Full debt. So that what we did is we're able to. He bought some properties like outright, right? And it helps the servicing, and then he was able to buy 5 properties in a span of 3 months. From that, and then what he did then is sold the property that he has joined with his ex. But at least he's free.
And I think he's working on the new principal place of residence now.
He's going to buy his PPR.
Cool. Any other scenarios?
Well, the other scenarios that we have is that again, cross securitizing of properties, and when you do cross securitizing, we need to.
You're tying your legs together.
So this one in particular, they're cross-securitized. There are 2 properties cross-secured. So when we refinance it, it was short then for the remaining. So we have to refinance 2. But because there was a release of higher equity, we're able to make up for the shortfall. So once that has been uncrossed, we then in a short span of time, we revalue the property. Now they have 7 properties of some sort. So I think the strategy in place is that we need to make sure that moving forward, where can this person borrow next, or which lender there that can value this property better. 2 things that you need to look at in every deal is servicing and equity.
if you don't have the money to buy it, you can't buy it.
Yeah.
If you don't have the cash flow to hold it, you can't buy it. So
But you also have to remember, right? There are lenders there. They might not be part of the main lenders, but the second tier, that I don't even consider them second tier. First Mac is not a second tier. Second,
yeah,
second lender, but not
yeah,
second. I won't consider a
they're
second
not
tier
too
because
far down the rabbit hole.
yeah, but they get good interest rate, right? But
Yeah,
they cater for good investors because the way the servicing calc is done is that the negative, you have a 8% to do the assessment rate. The negative gearing, they use the 8%, not the actual rate. So that's quite generous for investors.
yeah,
But you just have to know who are these lenders that can,
yeah,
lend you. And it takes a lot of good brokers to know what these other lenders can do. So I
yeah,
think basically we do a lot of workshop with different lenders and yeah.
yeah. Cool. Any other things to talk about?
Uh,
Like how's the market changed with rate hikes? What are you finding out there?
where, as I said, we tend to we do a lot of okay, this is classic, right? Because today, for example,
Yeah,
this particular person cannot service the loan because their existing debt is higher interest rate. We're lodging this application and the bank says your existing debt is the interest rate is high. So what we did, we asked a pricing without even he didn't even know. This
mm-hmm.
person didn't even behind the scene. I said, let's have he's got a debt with National Australia Bank. He has the debt with CBA. Why don't we negotiate rate for these people?
Yeah,
Up for this person. So we negotiated the rate. We given a good discount,
yeah,
right? We got nothing out of it
yeah,
except to help this person. And because of the discount that makes their interest rate lower, now we can service with ANZ because when we
yeah,
say to ANZ, oh no, it was 6% before, now it's only 5.75. Now
okay,
there's a bit of a difference there. It just push it like
okay,
so we negotiate for that interest rate. You didn't even the person didn't even know that we did it behind the
okay,
scene just to make sure that it can service. Now we can present, yes, you can service, and you also good news, you got a better interest rate with your existing loans,
okay,
and that's
sure,
free of charge.
yeah. And I just thought of something as well. Like, there's a lot of people out there that are looking at the moment. Like, Christmas has been renowned for opportunities, and I work on Christmas time and New Year's and that.
Mhm.
I'm dealing with the agent, so might work from
So
the
do
beach and
I.
stuff like that. You do. I remember 2 years ago we caught up with a client on
Boxing
Boxing
Day.
Day, and
It's
Boxing
just,
Day at the shopping centre in a meeting with
yeah,
someone. So yeah, like we're working, but if someone wants to go shopping over Christmas, they need to become finance ready as well. So
mm,
you can't just be there on Boxing Day and saying, "Hey, okay, let's put a deposit down," because when's your bank going to come back? When's your broker going to come back? When's your
solicitors are away.
solicitors are away? All that sort of stuff. So I think it's important if you are thinking of buying over the Christmas period of that, to get yourself finance ready and to speak
That's
to
right.
Rose, pull
Yeah,
out the
yeah.
equity. Each time that, if you're thinking about, okay, the market might crash, people have got these weird ideas that the market's going to crash and all this sort of stuff. But let's assume that it does crash, right? And everyone's happy. The people that are waiting out, if they haven't got themselves finance ready, they're not going to be able to service. They're not going to be able to pull out the equity. They're not going to be able to take advantage of any of that sort of market either. So I think it's important to, review on a regular basis. How often would you suggest someone should review their loans and their position and their equities?
Well, I think there is for me the I always when you feel like your interest rate is high and servicing
Yeah,
repayments is taking a lot out of you. So I think you need to call a broker and say, can you just review my financials? I mean, look
mm-hmm.
at what we did today, right?
Mm-hmm.
We-
Yeah,
All we did is to ask for a better interest rate, a discount of her existing loans,
yeah,
and and also with the interest rate being high, right? You need to always mindful like, is this really serviceable for you? Now, refinance. I mean, as I said,
yeah,
the new money has better interest rate because new money means okay, if you stay with CBA, for example, or ANZ, for example, or wherever, right? Because you're an old money, you can only do so much in terms of negotiation with the interest rate. But if I bring you to another lender,
they want to
they
buy
can
your
settle
business.
new money, so they
Yeah,
give you a better interest rate plus cashback. So that is also
they're trying to buy
important.
new business. Yeah,
Yeah, and also Sorry.
Yeah. Why are you sorry for?
No, because I overtaken you.
No, all good. All good.
Also, pre-approval, guys, because the interest is coming. If every month we have an increase in interest rate, do the pre-approval now. We'll base the servicing or the
On the
current
previous month. Yeah.
previous or current month, right?
Yeah.
If you do the approval in the next month or not the next month, look, you may not be able to service.
Yeah.
But whilst you can, because it lasts you 3 months.
Yeah.
So which is great, right? At least you were
Exactly.
assessed
You're
in a lower
finance ready. Being
lower interest
finance
rate.
ready.
Yeah.
Cool. Any other things you want to talk about?
Look, what are the questions? They
Let's
maybe
go
we
to some
could
questions.
yeah.
Okay. Cool. So, got a question here. I'll go from the bottom. George says, "Thanks, Rose. Good to personally meet you at the Christmas party. You know who that is."
Hi,
So,
George, yeah.
yeah. All right, where are we here? Do you? Wait, let's go there. Hey Nathan, is it possible to buy a block of land in a super fund, in a self-managed super fund, example a bush block out of town, and just have it sit there, do nothing, and I might use it as a hobby farm, firewood, or private rent to a mate? Look, I can't give financial advice on that front. However, it's important to know when you have a self-managed super fund, you are managing your own super, right? And it's important to get some advice and guidance around that. And I can't give that specific guidance and advice on what you should and shouldn't buy in there. But when you do have a self-managed super fund, you can go and invest it into a Bitcoin. You can invest it in the gold, silver, shares. I've seen people buy a race car as an investment and then they hold it and it goes up. You can't personally benefit from it, so you can't be using something within your super fund. But technically,
you can't even buy property from your own relatives.
Correct, it's very compliant. However, I have bought blocks of land in my super fund that sit there and do nothing, and they go up, and I have the view of selling them off. So I buy it for 10 grand, 20 grand, and sell it off for 100 grand. And I've done that quite a few times with my super fund. So it is possible, and it's important to, do get some good structuring advice around that. If you need help, it'll be important to catch up on our webinar, because we're going to have people that can answer that. We've got a webinar coming up. I think it's on the 7th of December. 7th of December. We're going to have a panel of my team. You'll have Rose, you'll have Ridwan, you'll have Stephen Sidorovsky, so accountants, lawyers, property management team. You'll have all the team there to ask these questions. So, yeah. Zach says here, "Hi, Birchie. Hope you're doing well. Looking forward to settling on our first property. Many more to come. Can you shed some more light on the director ID situation, as I have a decent amount in super, but I don't like the idea of it?" I think the time and the window is, closing on that. Zach, there might be something to take offline. I can't give advice on that. However, there's certain belief systems that I have that are very different to most of the ideal out there. So I don't know too much about it, just for the public record, but I think we should have a chat about that because it is important. Colin said, "Is this live?" Yes, it is live. So thanks for tuning in. Johnny said, "An investment mortgage broker is super important. Big difference to your PAYG broker." Josh said, "Love your work, guys." Josh, love working with you and helping you kick ass with your goals. Johnny says, "As you scale, when does a trust become important? Much before you hit the borrowing capacity, or when you're close to the borrowing capacity? Does it make any difference buying in a trust or not? When you should buy in a trust from a finance perspective?"
So obviously, buying a trust is for asset protection, right?
Yeah.
But you also have bear in mind that the trust income, the banks has different takes on trust. There are, like, for example, ANZ would not take, if I apply for a personal loan of under personal names. They said any debts that I have under the trust or an income, if I don't use the trust income, I don't have to take the trust debt. So which is really great, because trust debt cannot be cannot form part of my service. So that's a good thing, right?
Yeah.
But CBA, for example, they would say any trust debts or anything that you are a guarantor or director of, we need to take into account that debt because you're responsible. So case to case basis, lenders to have different view on trust, but overall, FYI, trust we can't claim the negative gearing effect.
Yeah.
Yeah. But there are lenders there that may not consider trust debts as long as you didn't bring the trust income. That might help your servicing as well.
Yeah. Thanks, Rose. Pentella says, does your income need to keep growing the more properties you buy for serviceability? I've got a way of explaining this one. I might answer it,
Yeah,
and then
you
you
answer,
go
yeah.
into it. So let's assume you've got 100 grand income and you've got $1 million mortgage. Most people go out there, they earn 100 grand, they go get $1 million mortgage, they buy a house to live in, pay they have to go to work every day to go and pay that mortgage. However, if you have a look at the scenario two, where you have two people, one has $1 million, they both have $1 million in mortgage, and they both have 100 grand income. I'm just making these numbers up, not saying it's services. Rose is the expert to go and work that out. But if we had both those people, one goes buys a principal place of residence, is based on their working income. But if a second person goes and buys 5 or 6 investment properties for 200 grand a piece, 150 grand a piece, then they would have $300 a week times 5 or 6 amounts coming through, meaning that they'll get 1,500 a week, 1,800 a week. They're getting 80, 100 grand a year extra income. So that means that yes, your debt has gone up. Both people, one has $1 million debt for a house they live in, one has $1 million worth of debt across 6 investment properties, but you've got the extra rental income coming through. So when the bank looks at your position, they're looking at, you're not just on 100 grand anymore, you're on 180 grand or you're on 200 grand, and it helps you service more debt. So, yeah. Do you have any comments on that?
No.
Okay. I've heard trying to sell a property in self-managed super fund is a pain. PITA. I'm assuming pain in the ass. I'm assuming that's what it means. No, I've never had any issues with it. You just sell it, and you need to make sure it's all recorded properly in that for compliance and that. Danielle said Rose and Zinger is the best, seriously most knowledgeable mortgage broker, just fabulous. There you go, Rose. You got some. Rose loves the compliments.
But of course.
That's from Danielle there.
Okay. Oh, dang. You're sweet.
Pat says here, Rose, if you retire from your PAYG job because your portfolio allows you to, can you borrow further investment properties using income from your investment properties?
Yeah, there are the old days, right? They would said like the income is like rent. Your income is rent reliant, right?
Yeah.
Nowadays is not. They don't. If it's services under rental income, they're fine with it.
Cool. Colin says, Rose, do you do equity release on commercial properties to buy residential investment?
No. So this is, guys, remember, commercial property. If your commercial property grow in equity, the bank would only release that equity if you also purchase another commercial property. This is because there's a code, non-coded NCCP or whatever it is. So commercial is non-NCCP, is not like national credit protection, right?
Yeah.
So what the bank was saying, because we cannot control the release of this equity, we cannot, unless you have to use it for commercial purpose.
Okay.
So that is the downside of buying commercial properties, is that you can only purchase another commercial.
But you can release it to purchase other commercial.
Yeah, that's correct. But the purpose has to be commercial.
So what about if you had a shop or a commercial property and you wanted to release the equity and buy a block of units, which is commercial loan?
If it is a commercial, yes.
So you just buy a block of units then. So we
Which
just
is
try and find a way. Try and find a way to make it happen, right? Kate said here, so the best to get our 2022 tax return sorted just before shopping with you guys. You don't need to.
No, still 2021 is still acceptable. 2021 is still acceptable.
Okay.
And also remember, nowadays there are banks that can take the 1 year singular financials, right? When I say singular financials, say for example, I got 2021. My 2021 is not that great, but my 2022 is good. I'm using the 2021. Lenders can sometimes says, okay, if you're using the 2022 because 2021 is not that great, we need to get the 2 bus statements, right, to confirm that this may be the new revenue and that sort of thing. So we can probably just put a narrative in it. But 2021 is acceptable, still is.
Good stuff. Johnny just said, locked in property number 8. Thanks for all the info you share here. My pleasure. Yeah, happy to help out where we can. And there was another question here just from that last one with the can you release equity from a commercial? So if you have a residential property and let's say you buy it for 500, it goes to $1 million, you've got equity and then you could pull out a few hundred grand. With a commercial property, could you cash out equity from that, or you can't cash out? Or
No,
you have to.
you have to, yeah.
Okay.
See, this is with residential, you can harvest the equity to purchase a commercial, but a commercial cannot, you can't harvest the equity to purchase a resi.
Yeah.
The purpose has to be commercial
Okay.
because it's a non-coded
Yeah.
deal.
Awesome. Well, I think that's the questions answered.
Yeah.
Thanks a lot for coming on tonight,
Thank
Rose.
you. Thank you.
We were told to try and keep it at an hour, not go on to 2 hours like I do sometimes. It's been about an hour and 10. You've been speaking for about an hour, so thanks a lot, Rose.
Thank you. Time flies.
If you guys have any questions or want some help on that front, there's a link in the description. You can click on it and get in contact with Rose.
Click the link below.
Click on the link below, yeah, but to the side, above, below, wherever it sits on your device,
Yeah.
wherever you're watching. Some people might watch this later on YouTube or something like that. And Rose is very humble, but sometimes she's not so humble. She loves telling everyone, what did you become a platinum broker recently?
Well, okay, let me, before we sign off, right? Obviously, I'm a I'm a platinum broker for Commonwealth Bank, and I was told there are only 70 mortgage broker in the whole wide world of Australia that is platinum. So I'm one of the 70s. Maybe I'm the number 70 or whatever it is. And last month, I was invited in this called is MPA magazine. It is the magazine for in the broking
brokers,
industry. Yeah. All the brokers has that magazine, and I was invited in the round table for 10 lenders, and there's only 2 mortgage brokers. There's only 12 of us in the round table. So you get the general manager of La Trobe, you get the CEO of Liberty, all these big shots, right?
Mm-hmm.
And me and that.
The head of Zinger Finance there. We've got the big shots from over here.
So,
we're trying to be a bank. So
yeah, there will be a write-up in December issue. So maybe I should.
Rose is a B grade celebrity here now. You know, watch out, Chris Hemsworth or whatever his name is.
Yeah, but the magazine will be out in December. So yours truly.
So Rose may not be here for too much longer. She might be in Hollywood. She might be in Hollywood soon.
I can't even act. I can't even speak English.
Rose, I know what you can do, right? You can design
you.
Nice property portfolios. You can do a wonderful job. That's using me as a testimonial for you. It's been great. You know, I wouldn't be here with my portfolio if I didn't have the advice and guidance from the last 20 years from you. So, so thank you, Rose. If you do have a loan, make sure you book in a chat with the team. It's not just Rose. We've got like a dozen broker staff. We're constantly growing.
Yeah.
I noticed the other day I walked in the office and you've got more staff, Rose.
Yeah.
And every week we're trying to find more staff. And I've got offices all over this building, right? And I just need to continue to get more offices to put all the staff in. I'm noticing that your staff are now approaching the customer service team.
Right.
Soon I'm going to be out of my office. You'll be seeing me, not in the office anymore because I won't have an office because you guys will, it's good.
Hey, I'm so proud of Zinger Finance, right? I mean, we are a team of 13 and we don't have turnover. Like we stay put with, I get a team of.
Yeah. You don't have.
For,
Our staff, like I was actually talking about this today because we've got we're in talks with a new HR person, and I was like, our retention on our staff, like there's been times in our business, it's never happened in Zinger, but it has happened.
Yeah, it never happened in Zinger because guys.
It has happened in other business units.
Yeah, but not Zinger.
But we don't actually have it in any areas now. Like we have very good, good
Zinger,
solid team.
not in history.
Never in the history of Zinger, no. So
yeah.
Denisha just wrote there and said, "That's right, Rose." So proud of you.
Hi, Dee.
Johnny said there, "Come on, A-grade celebrity." So she's going to leave us and go to Hollywood for that one. So she's very proud of that. But I do encourage you, like if you are thinking of building a property portfolio, reach out to my team. They're here to help you guys. There's so many stories. I don't think people really understand the amount of cool stuff our investors do, right? Like it's very underrated. Like I realized that at our Christmas party this year that it's very underrated. The amount of cool things that have been done in the last 3 years since we've had a Christmas party. So, and it wouldn't be able to happen without the team, the whole team in finance that's able to finance
Yeah.
these deals. So, do reach out, and links in the description. If you don't see the link in the description, send us a message, send us an email. You know where to find us, and we'll catch up soon. So, yeah, thanks a lot for watching and spending your Tuesday night with us. We'll catch up shortly.
Good night.
See you guys.